Good afternoon, traders. How are you going? Hope we're all doing well today and having a good day so far. It is the 2nd of the February, sorry, 2nd of the 2nd, 2017. It's a live stream. So, um, as I mentioned on Mondays and Thursdays, we're going to be doing the live stream. The rest of the time, we're just going to put up some handy videos that might be of interest to people. So on the Monday and Thursday, if anyone wants to chat about something, just feel free to put it up into the chat. So we're just going to go through a few stocks. We'll look at some currencies as well, just bits and pieces where, what we think is going to affect the market, and where we see all, how we've seen it all play out anyway. So we've discussed this in the past on Monday as well, but we'll take a look at the big thing for today. The topic I want to chat about today is really just looking at the ASX200. We have spoke about it bouncing off that 5600 level. So we'll go in a bit of depth there and just look at the shorter term time frame charts too, just to see what the action's showing us at the moment. And we'll also go through just a quick look at the currencies, the three majors, three of the majors, the Aussie, the Euro, and the Pound. And we did speak about that in one of the videos, just those currencies and what they're looking at, or which sort of way they may be pointing at going forward for the markets. So we'll take a look at that, and we'll get into some stocks just after that. So yeah, just be ready, guys. If you've got anything that you want to chat about in particular, any stock in particular, I know I've spoken to a couple of you in the past few days, and I know there's one called VAR. I think Michael in the chat, if he's there, is keen on that one, so he might put up a bit of info. But we'll see how we go, and we'll take a look at that probably. And there was one other, and I just can't remember, to be honest. But I'll grab that. I know there was an email through, and that was from Paul. So Fairfax FXJ. I think that's got a bit of potential. So just keep an eye out on that one as well. But we'll talk about that a bit later on. All right, guys, let's get into it. Just the housekeeping, the standard housekeeping. We got. You can follow us. I don't know if you can see. It's probably not as great on this page. That should be a bit better. All right, so you can see us on. Follow us on Twitter at trade_setup. If you search that, you'll find us on there. Feel free to join us on Facebook and link into us on or subscribe to us on YouTube. And that way, anytime we stream, you'll get a heads up from YouTube as well, just saying we've gone live. And just the general advice, just remember, we don't talk about anything in anyone's specific circumstances. It's just all the general advice, chit chat about the markets and where we see things going. Anyway, let's kick it off, guys. Let's get started. Let's take a look at where the market is at the moment. Had a good bounce yesterday. It sort of seems we're leading the US around by it some days. Headed south on Monday, and the US opened down. They got sold off a bit, so it'll be interesting to see what they do tonight. It was pretty flat last night in the US. Excuse me. As we had the Fed meeting minutes. Sorry, just one more thing before we delve into it. Just remember that if you're watching it on YouTube on the desktop, just remember that you can actually change the quality, because I know I have to do that every day. I don't know if anyone's got it set differently, but I have to change it. You just hit the spinning wheel and then just make it a bit clearer, and that will come out clear as a bell. Anyway, so yeah, what we chatted about. So they had come out with the meeting minutes. Widely expected they weren't going to raise rates, which is pretty much what happened, and also widely expected they were going to talk it up a bit, which they did. And this comes down to looking at 3 rate rises now. I read some very interesting articles where it is doomsdayist, and it's always the bears are coming out and they're pumping up things when things look they get a bit overboard. They're always overbought, always pumping it up. 480 pixels is sufficient. Perfect. Thanks, Paul. Thanks for that. Now, yeah, so they're saying that it could take to tip this market over, and with the current debt levels are just massive in the US, pretty much across the globe. I don't know what they've risen by over the past years, but they're saying there's like a super cycle which we could be coming towards the end, and we could be rolling over with regards to debt. It's mostly to do with debt. So if rates rise, say 3 times this year, that could be all it takes to tip it over. I think it was something in the Age talking about it. I mean, of course, the Age, they're not known for facts and figures too much, I don't think, and anything that sounds good, but it does. It's an interesting thing to read. Whereas if they do rate rise in the US, which they're looking at, to contain inflation, which is what they have to do really. That could tip them over and really cause problems with their the debt. But there's other ways they can do it. There's always some smarter guys out there than us that know what's going on. But either way, there's still a bit of talk. It doesn't matter what happens. Sometimes it's just the talk that can tip the market over. People not willing to buy, and then people rushing in, taking profits. Doesn't mean technically anything has to happen, and fundamentally it could just be all emotional. But we'll see how all that plays out. Now, so the market didn't do a hell of a lot last night. Would expect that to probably bounce. We are up 5 points, so I did expect it to open a bit stronger. Not a hell of a lot, because you can see overnight. We'll take a look at the charts now on the ASX. You can see that it did pop up through just here. Did pop up through that key level of 56.71. So this is a half an hour chart. It's not the daily. Just remember what's happening on the daily. We've spoken about it a few times, that 5600 mark. Well, let's just get up the daily now. Just have a quick look. And just keep an eye on those banks too, if anyone's watching the banks. You can see that 5600, we said it could be an important level. Look whether you like it or not, just where the stochastics are. And like I said, you don't let stochastics or any sort of, if you're looking at technicals, don't let the indicators lead you. Just use them as they are there as a tool. They're a lagging indicator, of course, but they are there as a tool. Give you a bit of a heads up, and then from there it's really just price action. And then, once you get the price action, you're taking an educated guess at what's happening. So it's a balance of probabilities, I guess, the way you should be always trading. Well, that's the way I do anyway. So that's the way I like to view things, a balance of probabilities. If they're on your side and they're looking quite healthy, and you know that generally you may have done the research and everything is with that type of setup, with that type of, what you're seeing is more often than not it works out for you, that's when you take it. Little sidetrack there. But yeah, we're looking at that 56 holding up. We had a couple of good day yesterday. Today is a bit flat, so it'll be interesting to see how we go. If we are right with what's happening with Trump over there, it could just roll over and straight through 5600, or we could just start. What they also said in the Age is what they're expecting. Some of the bigger banks in the US are expecting that just not a severe rally, but just that euphoria, bang straight up, and then just followed by, maybe the start of this year, then followed by a capitulation, just the same and more, going into the end of the year when they do raise rates, and then tightening. They're tightening loans. All the funding costs are going up, so that's where you'd think company valuations would really kick off. One thing I was just speaking to someone about before, and what I did read somewhere, don't know where, it was on, if I can get it up, GDP. GDP in the US, market capitalization to GDP as a percentage in the US, so that's market cap of the S&P, I think, as a percentage of GDP. It's currently at around 130 to 140% of GDP. And there, I think the historical average is around 50 to 60 or somewhere around there percent of GDP. So obviously it's not an indicator as such, but it's just a fact that when it's getting to those high ratios, a lot of the times it's followed by a sell-off. And you can go actually just, I don't know if this is, you can Google it all. I'm just on Investopedia at the moment, but there was a fact somewhere I saw, just trying to find it if it was on Twitter. Yeah, I've got it on Twitter, but it's going to take me a while to find it. Anyway, so the way it's viewed, whereas if it's overextended, companies are quite highly leveraged maybe to be up at these valuations, and obviously with the rate rise, it's going to crimp that a bit. But yeah, as a percentage of GDP, we're not normally at these levels, and around 50 or so is generally led by a rally, which so we're not at those. We're at about 137, I think it says. But that's an interesting little tidbit of information. Let me just get back onto, here we go. So we're looking at obviously with the ASX, one of two ways. It's pretty clear. We're getting extended down here, and we did bounce off 5600. Who knows what we're going to do from here? We're going to bust through, retest it, maybe wash it out, and then bounce. We don't know. So the only way really to find out is to start looking at the lower time frame charts, and this is what we've done. So we've seen I think I was speaking to, it might have been you, Paul, when we were discussing this on the ASX. This is where if we just go out to a bigger chart, um, this is why I'm viewing it currently at the moment, whether we just go into consolidation. I think we've mentioned this before. So the market's trended down. You've got lower lows, lower highs, and it's pushed down. And then we had a key level up at 57.19, pushed down to the lows at say 5600, give or take a few points. A weak market should have rolled over probably around it, maybe a retest of that 56.95 or even lower retest, and then go a bit lower and then take out those lows at 5600. Instead, when you see that type of market action where it rallies all the way back up, it retested 57.19 but still held that trend down, which you can see did spike a lot lower, and then it did make a lower high. But the thing is, it's just busted out only ever so minutely, if you can see that, which is just here. If we just draw that up, so to me, it's not a, oh, what are you doing here to me? So you can see that little high there, that lower high is just under 57.19. So we didn't break that level, but looks like we may have just broken out of that uptrend. And that's quite a solid rally. And remember, this is an hourly chart now, not a 30. Just take that off, not a 30-minute chart. Push lower, pop up. We did have a big sell-off, but that to me is like that initial stage where if you're shorting, you'd probably be a bit concerned with looking at that. So if you're shorting into the market, and that's where we've gone all the way back down to 56.05 and retested that and held that up. So that's another good sign. So you put two and two together and making that high low. From here, we don't know what's going to happen, whether we do bust up. But generally, a double bottom is followed by, we're going to attack those highs at 57.19. You can see this, and this breakout of that level there at 56.71, we busted through, we pulled back, made a high low, and we're in the midst of just maybe or maybe not, is pushing up through it. If we just break it down and just go down to the 30-minute chart. So there's a few things, whether we just sit in that range, we don't know. I don't know why that won't let me do that. Whether we just sit in between that range, but I'm starting to feel that we're gonna hold. We've got some minor higher lows in here. We may be contraction here. If we're holding some higher lows, then we're going to bust back up through 56.71, and we'll start legging it up to 57.19. That's the way I'm viewing it at the moment. If this starts holding up, I just see there's too many factors where we broke up here, we've held down here with a high low, held support. There's too many factors that it's showing that's at 5600. It seems to be a key level, a good turning point as well on the daily. And we're at stretched on the daily when we're headed down here. Just remember all those factors which might drag in some buying. Now from there on a daily chart, if we just go back to this, sorry, I'm jumping back and forward. We don't know if we're just going to be contained back up here above 5700, maybe retest, build a lower high, but it's just something we're going to keep an eye on. But I think that for me, the balance of probabilities just at the moment is where we could be heading back up to retest 5800. And if we just bust up straight up through there, then it's on. I think we're going to 56,000 to retest those highs up there. But we'll just have to see how it goes in the coming days, weeks, and what happens if it is true that we're going to have a bit of euphoria in the Dow in the US the first half of the year, and then going into they start raising rates, then crimping all that, and then we have a bit of a rollover. There should be from here we should be legging up through. You'd expect 5,800. So there's definitely some reasons to be searching around for some quality stocks at the moment. Some reasons to be buying some stocks. So anyone got a different view on that just at the moment of what we're looking at? Just while I have a sip of my coffee. But we'll click over to some currencies just while we're... Oh, that's not what I want to do. Sorry, guys. Put the wrong button there. All right. Let's click it over the Aussie. This is a 30-minute chart. We might have to go out, but that's on the rise. You can see that's really nice price structure. See how it really starts curving up, taking out these. If you see where my mouse is here, this low after a major level around 7,200, popped up, retested that low, started taking out some of these little anchor levels for that trend on the 30-minute chart, popping up, building a higher low, a higher high just in here, pull back, made a higher low, and that's just beautiful structure really. Now, if we just put it on an hourly, probably a bit clearer. It's really nice structure on the Aussie. And you can see that major leg down, major push up to get 7500, 7510, big roll over to 7200, 7170. So that support down there, and then we busted straight back up. So that's what we're talking about in the ASX. When you get those moves straight up, if it's a weak market, it should have made that lower high. It didn't. It pushed all the way up to retest. So at that stage, you're concerned that if you're short, you just be wanting to look at it twice. Me, Michael. Yeah, who's the next? That's exactly right. It's all bounced on opinions. The market's full of opinions. It's not anyone expert. There's always self-titled experts. I've known them in the past too. We had a guy when I worked back in the day as a broker. He was an expert. He did never get it right. When the market's extended, he was calling it a buy, it roll over, and he's saying it was a sell, and then it pop back up. He just would not get it. I don't know whether he had a bad run, but geez, to be an expert and get it that, as there's traders and there's experts, analysts, I guess. But yeah, it's always interesting on reading the different opinions. Back to the Aussie, you can see that leg up when you push straight back up into a key area without pulling back really, and you just had this minor pullback down to say 74.50, and you can see that was setting, holding some minor high lows. If we just, you can see that in here, high lows. That's ideal. I really like that. That's some great structure there, and you can see that was just contracting in. You had a nice little break there. You could have just taken it on that break through here, but that's led to push up through, and then you've just come back down and you retested. We tried to go high, come back down and retest, and we look like we're in that next phase. You got 1, 2, 3 back into the zone. 75.50 was most recent. Then we started holding higher lows. It was a bit hard here, because you rolled over your test. You made a high low here, high low here. Just probably running out of steam when it was getting up here. I don't know what the daily was doing, the high time frame charts, but we had to just wash out a few traders, bring in a few shorts, which did happen, but we're still really just holding those highs, holding that breakout, holding the highs at 75. Maybe you get people who are expecting a big push back down to build a major high low, but it just didn't happen. Held those highs and started building some high lows, and just got today really. Was it nice sort of kick up? So that Aussie's looking strong at the moment. We don't know where it's going, but if you're just working off longer time frame, you'd be probably gearing up for a 7,800 push, maybe up into those highs. But it's either way, it's looking quite good at the moment. So we spoke about the Aussie kicking on, with a lower US dollar, the euro starting to look a bit along the same lines, holding higher lows, looking good. I think we spoke about it here last time. It was popping up, did wash out, which it can do quite easily. It's just contracting in off those highs, and then this was a nice little zone to be able to, if you could trade it through there on the long side, and that's looking good as well. Just go back to a 4-hourly chart. So you can see that we're getting up into a key zone around the 108.70. Had that big leg down, contraction back up, another leg down, held up in support. A few tests of that. Buyers were just soaking it up, and then we've held higher lows on the way up. Bit of a push out down through there. I probably may have, I'm guessing that was over a number 30 a couple of days ago. I'm assuming that's a European number or something come out, spiked down, just a big wash out of those lows, and then bang straight back up again. So that's looking strong. I'd expect that to be heading towards the 108.70. This resistance, maybe wash that out, contract back in, build another major high low, and then go again. But we'll see. And the pound, a bit along the same lines. They're all heading a bit higher. We're getting US dollar weakness. These currencies dragging higher. It's getting a bit extended up here on the 4-hour. Yeah, so it's really on the pound. It's probably getting a bit extended up here. We may just be heading up, might spike up into that resistance zone, and then we may have to pull back, wash out a few long traders just to get the momentum or the energy or people back on the sidelines. Just remember that the market's about who's in, who's not. If everyone's loaded into a position, how can it keep going? You need to get them back on the sidelines, ready to re-enter. So if that's the case, we may spike up into here, drag a few more longs in, then wash them out. Get a bit more fuel back on the sidelines for build another high low, and then go again. We just have to see, but that's not looking quite as strong as the other two. But you can see that on that time frame, it's had a big push down into support, pop back up. At that lower high at 27.60. If it was weak, it should have kept going down. We gapped down into it. Remember that time? And then it's just straight back up. So we've washed out this key level at 24.25, and then we're heading up towards. It's really 27.72, which is a major key level. If we break up through there, this double bottom's held on a longer term. That's going to take us right up to potentially 134.50, that high up there. Anyway, let's any other views? So it's looking like it's playing out a bit like we're expecting. Whether it keeps going that way and there's more selling in the US dollar and that starts picking up, I think there's a few people that have just probably loaded up a few shorts, a few longs on the US dollar, and they're just probably getting out of that as that it's starting to look a bit more skewed to the downside. But they could easily just come back in, like we said, putting fuel on the sidelines as well. Just forgot where I was heading with that, but US dollar. Anyway, we'll see how we go. Let's get into some. Let's just take a look at some stocks now. And what we're viewing as if this market is going to head higher, and we're looking quite good. We're only up 3. We're sort of holding pretty much where we closed yesterday. Nothing in particular too strong today, but we'll see. We've got a few stocks on the radar that we've SAS, got to be proud of that one. That's kicked up today at 10.5 cents. We've been in at 8.6. So far we're probably up, I don't know, we're up good on that one. Nearly 20%, 15% or thereabouts, 16%. So that's looking good. I think that's got some good potential. That could keep going. You can see these kind of moves. If that's the case, remember we've spent a lot of time, say from when was that high? Back November last year. Good part of November, December, January, three months holding that base, holding higher lows. Spent a lot of time through this year, really doing not too much, but holding 8 cents, and it's just recently popped up. So I think that whether it spikes on in, we've got a partial around 11 cents. I'm happy between 10.5 and 11 cents just to take a partial on that and see what happens with the rest. But that could easily really kick on, and it looks good. It's just going through those highs. Just remember, this could or could not be a lower high here, but it's looking good. You can see where the stochastics are. They've come right back down, but it's held the high low. So it's all gearing up for a good move. I mean, even on the daily, that with that sudden move up, it's not overextended by any means, just by looking at that. So yeah, that could really go on with it. You can see the difference when we had that push up to this level, 8.5. Got a bit overextended from these lows, from 7 to 8.5. Did pull back, so you're expecting if that was weak, that was going to go back through 7. Didn't. Held up around 8, so that was getting soaked up as it was getting, the pressure's down. You're looking at the stochastics as putting pressure on the market. Sellers are putting pressure on buyers, but the buyers are taking it in droves. It looks like they're holding it up. So when you see that type of thing getting towards oversold, but price is not going down with it, it doesn't show weakness. It's the opposite. It's showing some strength. Buyers, and you can see that high lows are holding, spiking up, pull back, and then bang, straight up. But it's still going to have a lot more to go. It could easily attack those highs, 11.5, 12 cents, and just go pop. I'd love to see that. So that's looking good for us. There's a few others. AMA is not something we're in at the moment, but if you look at the longer term structure, we'll just kick it off from a monthly. It's had a high way up. That was over the GFC. So prior to the GFC, it was trading up towards $1.10. We've just gone through that recently and got absolutely hammered through the GFC and spent the good part of all the rest of since 09 holding higher lows. So it has been climbing if you look at it from that perspective. After getting sold off, it has been climbing. So it just got banged straight down towards the end of 2008, all the way down to say 5 cents. Popped up, held a high low, popped up, held a high low, and it's just been building and building all that time. And you can see that nice little price action too. But most recently, we're seeing this as a good strong leg up towards $1.10, prior highs, remember, just before the GFC, pulling back. And you can see that that's a move down again. If you can see, let's just drill that in. This is a weekly, don't forget. This sell off, whatever, had the strength in it as it did when it pushed down to 75, had the same sort of strength of selling pressure down, but the buyers soaked it up and it only got down to a low as say just below 80 cents. So that's built the high low and that's looking quite good. And then it's had, it's popped up over the next few weeks, popped up, and then you got that inside. This is, I can't see a better example if we draw that up. We've said this in the past. Sorry, I just want to draw this up while I've got it in front of me. On a weekly basis anyway, if you're a weekly trader, whatever you want to be, that is a great example of a inside continuation we like to see. So that there Why isn't that going? All right, that is not working for me. There we go, guys. Sorry, it's a bit slow there. So you can see that the trend holding higher lows. At the moment, we're still contracting. That little trade here, you can see that. It's on a, that's called inside continuation. So it's building the higher lows. You can see it's squeezing in and then it's just popped up. That's on a weekly basis, if we draw that properly. That's a beautiful little trade. We got up only mildly through those highs at $1.12, so you got up there. Obviously, it gave you a good little return. You drop down to the daily, there might be a preemptive entry just within that contraction, which showed quite nice. But that's what we like to see. I mean, sometimes it leads to a good, powerful move up. It didn't in this case, but if you just search out those, higher lows holding, you've got contraction. You can see where it's contracting in on itself, and then you're just looking for that area where if it breaks through there, it's breaking out of contraction and kicking on higher. And that was an ideal little example. Let's get into it, and then we're starting to see that those higher lows holding again just recently, and it's looking well in our book really nice. Let's go to the daily. Let's actually just see if we can get that. So it was probably in here. I think that was a trade in here. You can see that holding higher lows. So you could really, you're limiting your risk, and that's the beauty of it. It holds higher lows, major high lows down here around 80, some minor ones just in here, and then pops up through that high, bang, it's on. Even in here, if you had your little a breakthrough this high of 98.5, that was beautiful. And it's kicked on. Pull back, so you're getting right now. Is that today? No, missed a few days there. Don't know why it does that. But yeah, you can see that this previous days got popped up here is quite strong, up to say 102.5. Sold off a couple of days ago and straight back, bounced back strong yesterday. So it's looking like the market's set. It's preparing itself to start edging higher and going higher. And then we'll be attacking those 115. Is it 115? These prior highs. So that I think's got a lot of potential if we just draw that up just to show you what we're talking about. And why I like it. It's again, you got that contraction, and you can see it's broken out of that contraction there. You can see where those bust through those highs, so that's definitely on our radar. Maybe just wouldn't mind, like, even if it goes up, pops through trades 103, I'd probably be happy to get in that one. So we might actually do an alert a bit later on. So we'll see how that goes. But I'd like to see a little bit more work day, a few more days of work done in there, but hold these levels higher lows. And if it pops up through, say 102.5, I'd be inclined to have a go at that for up to 115. But just remember the longer term structure looks great. I think it's got some good potential on that. And that's going to be breaking into new highs as well. Let's just go on to another. IFN's one we've had for a while. I don't know who's in that or who's not. We just took some profit yesterday, took some off the table. It's just popped back down to $1.01, but that looks quite strong. It's again, it's holding those higher lows. You had a couple of chances in here. Ideal entry through 90 cents prior would have been beautiful. You had to wait a bit, take a bit of heat on that trade, but it's really working its way up. Weekly, you can see that the stochastics are rising. It's looking good on a weekly for a break up through 105, 106, heading towards 120. But on the daily, it's just having a bit of a pullback. If we still do hold those highs up here on price, and we get a bit of selling pressure, but we're holding the highs, then that's going to be good. And turn around and just wash them all out, and buyers start to jump back in again, and then push it up to 120. That would be fantastic. We'll see how that goes. Anyone watching any of these guys? Anyone got them on a? Just want to touch on WBC. WBCs. I read Motley a bit. Motley Fool, is it? Just to see what their fundamentals say, what they're popping out with, and then go and check them on the chart. Now they're talking about WBC, looking at buying it. I think currently its earnings at 14.3 times forward earnings, and they're looking at it around 12 times. They think the average is around 13 or thereabouts. I think statistically around maybe 12 to 13 is their average forward earnings. And they're trading a bit higher than that at the moment, 14.3. So they're suggesting to look for a pullback to say somewhere around 12 times forward, which takes it to a price of around 29.4, 29.40, which is to me is way down here. I think that's a decent correction. Which let's draw it up on a daily. And they're saying it's got great potential, especially when they're paying out a dividend. They should be approximately around 6.5%, 6.4 if they hold previous dividends. that means it's going to be around 6.4%, which is, if you can get that situation play out when it's 12 times around the 30 buck mark, say just below, and you get those dividends, then that's going to make that quite ideal. Looking at WBC, but we've been toting WBC for a while now, toting it, calling it, looking at it, if you want to say. Yeah, waiting for a pullback on WBC. Ideally, we are too. I think we're just starting to see those early signs of it breaking out. It could easily, and it has, it's just pulled back off that 34 after popping through those highs. And a lot of the times when they do, you can see this here, and this is something to take note of when you're looking at your technicals. When they get extended, it extends into a resistance zone where at the time was just below 34. It gets extended there, and they just pop through. It's more of a washout. Than you'd expect it to pull back, build that higher low. So I think we could be in the midst of just building that higher low, and we're extended to the downside, but prices holding highs. And so that's an important thing just to keep an eye on. And now you just want to see, with that pullback, a bit more consolidation, maybe hold some higher lows. You might get a washout and then a pop back up, and then you want to see this type of thing. And just you can see that's just what that's doing is just bringing in buyers. They're getting more confidence with some higher lows. They are very poor. Yeah, it's a good. What I do like I don't know what their track record was there, Paul, but I just read them because I find a lot of their statistics and fundamentals I don't look at as much, but it's good just to read just to see what they're looking at, and then I'm always going to check it on the chart. A lot of times won't go near it, but that dividend play we had a while ago, I think it was VLW. That was one that they said. The other two I didn't like. I just thought that was great technically, and that's gone up. I don't think the other two have done anything. So obviously, maybe they don't look at technicals as much. They're purely all fundamentals. But I think since the GFC, I think it's important to look at both. I mean, I know I look at technicals a lot, but I think it is important just to have an eye on both. And then whichever way you gear your trading towards, it doesn't matter. But I think if just going from looking at the fundamental and then getting a good picture, a good story behind it is always important. And then looking at their technicals for entries and see what it's doing. See if because what they're showing is, does everyone agree with you or not? I mean, have you researched it properly or haven't you? And it could show up on the technicals. Because if you get this type of price action with higher lows, I think, yeah, they may be right. I think somewhere around down here, I think if you're waiting for that 29.50, I think it's gone a bit too low from their perspective. So they could miss the boat completely. And if people say, well, we didn't get that, they could turn around and say, well, you're near enough. It's not really. You still got to look at an entry. So if we do get that pushed down at the moment, I don't think we've got the entry. I'd rather see this type of price action. But then that type of price action would support their view too. And then you've got the basis of the fundamentals behind it. Good looking story, technical setting up. And then that, I think, would easily take us up through 34 and we'll be attacking 34, 75 and so on. But yeah, I'm still a big view that view, all that action, that price action put on a weekly, basically right through 2016. The lows were down below 28 and it held higher lows. This is a long-term basis too. So that after that big leg up, that kind of curving price action. So I think we need to see a major higher low, maybe 31 to 30, down somewhere around that region, would be ideal. But there's nothing to say where we can't just pop up through this little high. 32, 39, hold these levels, bit of contraction around these levels and hold these highs and just catch a lot of people off guard. And that's what the market can tend to do a lot as well. If everyone's sitting back waiting for a decent pullback, I'm not buying until it's down at these levels because I've done my fundamental, whatever, it could catch them off guard. And that's where you get a good strong move higher because people start chasing it. And you get the early bird jumps in. What does Davin call it? The early bird catches the cheese? I don't know. Dav, if you're listening, tell us what your little saying is. Something about the early mice catches the cheese or something like that. But he'll know more about it if he's listening. But anyway, we'll just see what happens with that. I think it's got a bit of contraction to do, only because it's had a good little sell-off, pretty sharp, pretty steep. And we'll see if the market can hold up a bit 5,600. You get a lot of these are doing the same type of price action on the banks. They're all in that zone where they could easily pop up. And they could just as easily wash down and pop down a bit. and then start building. But just keep an eye on them. I think they're definitely the banks are getting into that zone where they're worth a watch. Definitely worth having on your radar. What do we got here? WC. This is a good one. Is there anything, before I just keep babbling on, is there anything anyone wants to look at? Just chuck it in the chat. There was, I just noticed this too, and I think I have no idea what they do, to be honest. I just saw it technically. Let's just quickly have a look. Profile. OML, out-of-home media company, provides advertisers with access to a diverse range of audiences across its national portfolio. Okay, so it's in advertising that's looking, what are they doing? No dividend. All right, so it's pure, it's relatively new by the looks of it. But this is what I like. This, go to a weekly. Daily's fine. So that's all their price action. You can see that it's had a good push up. We pulled back, retested 4, and it's back into sort of this area. You can see we're back into this zone through here. It's not hard and fast, don't forget, but it's just where from making those highs, we made a minor lower high, washed out these lows at just above 4, made those lows down at say 3, and then started building from there. So it's obviously a bit of a zone where people are happy to buy. Just touched in there then, and then we sort of proceeded to take out some highs. So now at the moment, what I'm looking for is that, and you can see that by the way it gapped up that day too. It's just broken out of contraction. I think really once it starts picking up through 460, I think that's going to be looking really good. And I think that 440 levels looking at it's touched down there a few times. So this is why the difference between buying it now, are you risking that it's actually going to wash out 440 and keep going down? You don't know because no one knows what's going on. So that's why I like to see these breaks, of those little minor highs. We'll just drill in on that. So this is probably a heads up to what I'm going to alert in a minute. So it's a sneak peek, guys, if that means anything. But yeah, that setup, see, there's quite a few key things. We had that, I don't know, that's the weekly trend down, that breakout of contraction with that gap up. We're holding some minor high lows. We're still holding support, and that's around 440. And it's trade there. The stochastics are in a great region. It's getting oversold, but it's getting soaked up. As we got that move down, that contraction lower, it's getting soaked up. So I'm ideally wanting probably a 460 break, or even through that high at 465. I think that could really go on with it. Your first port of call was going to be 485. See what happens up there, but that way, if you do have that break there, you got your risk below 440, say. See what happens up here, and I'd expect just to pop straight up and through because that's looking quite strong, and then you've got a target of at least 520 and above. 520 is just, that's your next level where you might get some reaction. Sorry, is that what I'm saying? 540, I've already forgotten. 520, which is around here. You're going to get a bit of reaction, maybe up through here. If not, if it just keeps going steaming through, then you're looking towards 580, and you're looking for that to be potentially another leg higher, which leg from here to here, 380 up to say 580 is $2. Take $2 from there, you're looking towards 6 and above, 620. That gives you a lot of room to move, a lot of fat in that trade potentially. But we'll see how that goes. That's another one we've got on our radar. All right. Sid, Wayne, we'll take a look at that for you, mate. Just by looking at it, I can see two things. One, it's contracting down. And look at the weekly, it's had a bloody good move up, really. So I have to go back just to step back one. So since 2009, it really took out those highs around 450. So these highs that were way back in 2007. GFC's pushed it down to the beginning of 2009, pretty much where the overall market started picking up. All right, got up, had a minor pullback, washed out these highs, pulled back and retest these lows, even a wash out of those lows, I think 255. Yeah, well, a cent or two. Nothing here now. So retested those lows and up we go. Was that a really? Yep. And then we've had a good strong run up for the last 4 or 5 years. 2012, 13, 14, 15, 16. So 5 years, it's had a good, strong push higher where it got to 750. What did we get up to? 762. And we've been pushing down since. So just taking into context, it has had a good, strong push up. We don't know. We're expecting contraction of that leg up, if you're looking at it this way. From that 250, you expect a bit of contraction. And that's ideally that's to bring in, if, like we said before, if there's everyone's knows about this and is position long, you need someone on the sidelines. You need fuel on the sidelines to push it higher. All right, and that whether it's there or not, we don't know. We don't know who's watching it, but that's what's currently happening. It looks like at the moment we've got a bit extended to the downside, but I don't like it when it does that. Sorry, I just got to get my mouse up. Here we go. I think what I'd like to look at with this one, we're looking at contraction. We've got the highs up here. We don't know where support's going to come in. There was a minor level through here, which is just trading down now. It's looking like it's ready to break. It's still holding lower highs. It's got to break those higher lows. It's got to, could completely wash out that level, pop back up and go again. But if it does wash out support, maybe come back and retest it, then we want to see it break, a lower high. That makes sense. That's ideally to see it bring in some buyers. And then you're going to have a key level up here at 670. So at the moment, you've got, you had that push down, lower high here. That caused a big move down to 580. Did bounce off there, but then we sold off quite heavily again down into that zone, and we'll hold a little high lower high at 610. So that could take us easily just straight down. If this is the case, if that's just say that's 510, 610, 610. That could easily take us down. There's nothing to say. There's nothing for me just yet saying this is holding up. The fact that we're actually down and getting a bit extended into that zone again, which is one thing, but this is the opposite of a buy for me just at the moment, because you've got that lower high. So it's come up with buying pressure. You can see with the stochastics, it's gone from oversold to getting towards overbought. Not exactly. A bit of divergence there if that's what you look at. But the price hasn't really gone too far at all. It's gone from 5.90, it's gone 20 cents. You should have expected that to start picking up, a lot stronger. If that was going to be a strong market, it's not. It's looking more weak to me just at this time anyway. So we just have to keep an eye on it. But generally, just remember back to the weekly. It's still looking good. It's just contraction of that weekly. We might just get contraction, and you want to see off a weekly basis potentially. And another thing I've just noticed on the weekly too is that move down. It is getting a bit extended. We don't know what's going to happen. We don't know where it's going to pull up right here and start building. But that trend, look, it could go a touch lower, and it could just go down and retest that 550, just hold up there. But you want to see evidence. We've had that move up. We've had these little moves down. If it does break through these lows and hold up support, if you can see that, we want to see evidence of buyers stepping in. Okay, and then it may lead to some acceleration and just get that on the way up. You ideally just want to get it out when you see higher lows holding. That's the other side of a trade potentially. It's coming out of contraction, maybe that contraction lower, if you can see that. So that's why that's that key level at say 660 thereabouts, where we were talking about just before. And you just want to see that evidence, breaking out of contraction, holding some higher lows, and then it going. And that way it'll be targeting up to potentially through 750. But at the moment, for me, I don't see anything just at the moment to see where it's going to pull up short. Anything else, guys? Hope that made sense to you there, Wayne. Yeah, the P is suggesting it's getting it extended too. All righty, let's just see where the market is at the moment. So we've covered a bit today. If there's anything else, anyone else to look at, just chuck it into the chat. Oh, Paul, what did you have? Yep, no worries, Michael. We'll take a look at that. So for people that don't know, Michael and I have discussed in the past, discussed in the past a VAR stock. Paul knows a lot more about it. He may or be able to put up some links in there, some news flow. But as it's always good to know what some of these. It's not doing much at the moment, but I think from what I've learned, it's got a good story behind it, a really nice story. So, I mean, the technicals. It's This is a monthly chart, so it's hard to factor in, but it looks like it's because of the story. It's got that people who are following it are happy to buy it up strong, and you can see by that move up. Go back to a daily, that's sharp. Jesus, one day it's gone from 1.5 cents up to 7.5 cents. That's massive. So there's obviously a good news announcement there, and then it's been obviously as profit taking, sold it back down, and we're coming back down into that 1 cent level. I know this is a very small stock for a lot of people. Um, yeah, it's a fundamental story. You're exactly right. That the technicals are not as. If anyone can hear my daughter, I'm sorry about that. She's starting to knock on the door. Just be 1 second there, guys. Sorry, guys, back on there. So, like what Michael was saying, it's more of a fundamental story. But just looking at the technicals, it's down on, I think it's a half decent level. You can see that price contracting in. And a lot of the times, you don't even during contraction, you don't technically have to hold the lows, but you can see by the way it's not washing out the lows by a lot. So it's still people, popping up. It's still holding some minor lower highs, sorry. So we would like to see that start to build on the other end. But the thing is, I think with the fundamental story behind it, it doesn't really build; it just goes pop. Um, it could pop hard. So what we did see, I mean, it is like Michael said, it's not a great technical story, but the fundamental picture behind it, I think, is quite good. So it's worth people just having a bit of a research into VAR. For the more specky stock, you don't load up on things like this as much. But they do, risk to reward, they can really kick off. But anyway, if you've got any links up there you want to chuck in there, Michael, chuck them in to chat, people to have a look at. Is there any stories or anything you think worthwhile? But that for me, if that kicks up through sort of that 3 cent mark, it's going to take out a few of these lower highs. You can see that in the start to build, but we'll see how that goes. What was the other one? FXJ, is that right, Paul? Yep. FXJ is something Paul brought up to me today. She sent an email and I started looking at it, and I think if you go down to a monthly, that's all their data. Okay, it doesn't look, again, it's not looking too pretty. It's just this last 1, 2, 3 years, it's been contracting through here after getting sold down quite hard. It's had way back in 2000. I know that we go back a lot of data, but it's just to get the overall story. Pushed down sort of that 260, it's popped back up, made a major lower high, and that's caused that sell-off really, and that was because of the GFC. So there's a few factors in there that caused it to capitulate. You had that really pushed down at the beginning of 2009 when the rest of the market bounced. It did go with it a bit, but only up as far as about $1.80, $2, sold off again down to about 40 cents. But since then, it's held a higher low, and on the weekly, it looks kind of good. I do like that it's starting to, we'll draw this up a second, it's held around that 70 cent mark, say 70 to 75. It's got a little support zone through there. It's touched it a few times, but it has also got a resistance at around $1.05, $1.10. You can see those three highs through there. So it could just pure and simply bounce between support and resistance, more of a channel trading technique than something that's going to go on with it. But I think the story behind it, I think Paul was saying they're selling something. There's a part of the business to a US-based company, which obviously frees something up, frees some capital up, and I think they made a good return on that business as well, if I remember. Is that right, Paul? I think that made 3 times whatever. So they're gonna lock in a good little return, 2.5 times what they paid, I think, if I'm right. But anyway, I'm just waiting for Paul to answer once the chat catches up. But yeah, either way, that looks good. And if you go down to the daily, this is what's interesting me in particular. After And especially when we get these types of things, you can see that washout of 75, that prior low, it basically washed it out, rejected, and then it finished the day positive. So it's opened, washed it out, and then traded higher, and then held a higher low, and it's held higher lows since. And it's just with that some news. I think they're doing something to do with New Zealand as well, merger or whatever. They're looking good, and it's just busted through as of probably yesterday. Did pop up through those highs, and it's just busted through again today up to 94. So I started to build, and you can see this type of price action can happen. You can see this type of price action in here. It's contracted lower, popped up, taken out those lows, and then just gone on with it. That would have been hard to trade from my perspective off daily. Yeah, we're on a daily. Bit hard to trade, but it's definitely something. If that just starts picking up, if we see, I'd ideally like to see a bit of contraction around here in price. If we can draw that up, that's just me. I'd ideally like to see, so that's that resistance there. It's popped up into it, just gone up again, pulled back. This is that low at 84, and then we've just gone pop. I'd ideally like to see maybe a bit more contraction, just where the volatility comes out of the market a bit, and then still hold some higher lows and then pop. That could really lead, once you break some of those inside levels, really lead to a good strong move up, and that way you can target 105, 110, and there could be, your risk could be quite low, could be 10 cents. I don't know. So give or take 10 cents for a gain of around 20, so 2 to 1, or even 5 cents with a gain of around 2 to 20, 20 cents. There you go. So that to me, it's showing some early signs. I just want to see some of the contraction. You can see where the stochastics are coming from over extended there, held that high low when stochastics were in oversold. So buyers are soaking it up around 84, 85, not letting it get down and break down through that 82, 83 level. And then it's just popped up through those highs. We just, like I said, just want to see if it can pull back, build, take a bit of heat out of the market where it's getting soaked up, buyers are soaking it up, and then see that breakthrough. It just gives you a key level where you can actually work from. All right. If there's anything else, guys, it just market's just drifted about 3 or 4 points lower. Hasn't done much. It looks like it's a bit of a no day. Don't forget we've got payrolls out tomorrow night. Is it Friday night? Yep. US payrolls, which is always a big number, which the US could just be doing nothing tonight. Prior to those payrolls, there might be a bit of risk taken off the market prior to that. Now, if those numbers are stronger than expected, then expect a good little. Actually, you probably expect maybe the market might sell off. We'll have to see how it goes, because that'd be pointing towards interest rate rises. But if they're not, then the market could just go on with it. But I'd expect not much to happen between now and then. Our market looks like it's going to end up pretty flat today. Tomorrow, you'd expect probably a bit of the same. LYC, let's take a look. I've had a go at that once, and I don't like losing, so I don't like going back into it. But that's still, to me, it's still building. That weekly is getting extended, if you can see. Oh, you can't see, it's a bit hard. You can see it's well overstretched, getting a bit overcooked at 90% on the stochastics over here. No reason, again, you don't take that as a reason why you should be out or not looking at it. But the fact that it's failing, at the same time when it was strong movement higher, that was a good strong move higher. The thing is, it's held a high low, which is still early. I think it's still early days on this one. On Linus, what is it doing? 1.8 mil. I think it's still relatively early days. You've got a low down here, high low built, not a major one. You've got that market's just popped out of contraction, and then we're just attacking that 9 cent level, which, if it's stretched up here, we might just pop through. So just watch that. This thing could easily pop through and then pull back and then make a higher low. It might just go pop, pop. Good English I've got there. That's that most recent move up from a retest prior. Might just go through. It's extended, so it might have to just wash out some buyers out of that market and then start holding. And if it does that and holds, then I think that's going to really go into an attack 14 and above. But on a weekly basis, it's looking, a little bit stretched, but the price action's good. If that makes sense. So for me, I just take note when the market's getting a bit stretched into a zone. I like to keep an eye on it. Um, but yeah, you can see that daily, it's just going bang, it's sort of edging higher ever so slightly into 9. Even the daily, that's not the world's best price action. It's not, a sharp move higher. It's move higher, it's been controlled, pull back, consolidate, go again. You see that price action just most recent since probably towards end of last year. VOC, why do I know that one? Locust. I do know that was a Motley, I think, telecommunications, isn't it? That's something I did have a look at earlier today. The one thing I don't like is that's been sold heavily. I think they did have it, if I'm right. Motley had it as a potential buy or something. Um, this may be a bit of an example of, you know, take it with a grain of salt for now. It could be, let me just check. I've got Motley up here, or have I? Yeah, VOC. So they were talking about it. 2 telco stocks to buy today. Vocus Group. Okay, just go onto Motley and just see what they say about it. I don't want to go through it too much of why they're saying to buy. This is the name behind the retail business internet brands such as M2 Wholesale, Dodo, Vocus, Commander, Promise, and more. Merged with M2 Group and bought NextGen before senior management tried to throw out the CEO but failed and walked away with years with this business. The business and the telco sector more broadly. Okay. Basically, they're saying that it's looking cheap. That's it, pure and simple. That if that's what's caused the havoc, trying to get rid of the CEO or whatever it was, and that's why it sold heavily. You know, investors don't like uncertainty. I think that's what that's caused. Whether that's the case where it's come out the other end and there's no longer any uncertainty, but that's to me on a weekly basis, that's heavy selling, and there's nothing at all to show me why I should be buying this just yet. And this is what we're talking about potentially with Motley. Just saying it's cheap, yeah, that's great. Maybe it is cheap. Maybe there's people going to be starting to look at it, but I don't know for me just yet. Maybe the only thing if it starts popping up to through 450, it might be early signs. Um, Early signs is a good buy for me anyway. Let's just look at that. I'll go back to blue. I like blues. So you can see that market, popped down, popped up, and was heavy selling. That was over the uncertain. Popped up to roughly 6. I'm going to draw that up. I like drawing it properly. It's pushed down to these lows, had a bit of a push back up to around that 6 level, and then bang, heavy selling. So that selling to me is not over, and this is the most current leg down within that downtrend, if that makes sense. Okay, we're looking at is it a daily or a weekly I just took? That is a daily. All right, so we're looking at the daily chart. That's longer term trend down. It's had, trend down, tried to go back up and found resistance around 6 and got sold heavily. It's trying to go up now. There's nothing to say that leg, nothing to say it's over yet. I think the key level is right up towards 6. This could pure and simply be that's the leg down. Say that's right up at $6. We've had a pop up, say 450, pull back. We may pop back up and then just go down, head down towards $1. Who knows? But the market could easily do that, contract up. It's still the key level is 6. As long as it's below 6, nothing for me has changed just yet. Could easily do that. Or I want to see, because of the nature of that move lower on the weekly trend, because of the nature of that move, I want to see a lot more price action to do. I think it could easily just pull up towards the MAs and then roll over again and get some selling. I think it's got a fair bit more work to do. I don't see this just going bang straight back up and get on board, that type of trade. I think it's got more of this type of price action consolidating, where you see traders are happy to step in. So for me, this early buy, even just today, it's up 5% today, $18 million worth. I'd say $20 million. whether or not that's just purely on the back, who knows? It's just the initial bargain hunting could be. There's nothing to say, even if you bought it here, and this is what I don't like about these sorts of things. Um, Even if you bought it here and the market gets stuck, it could get stuck here for months, years down at these levels because that's quite severe, savage. So people who have been savaged on that, who have held it, well, say they bought it up here, didn't want to get out, and they're still holding it, or they just got out and they got sick of it around here, and they just go, "I've had enough." You just imagine what's in their mind. You're not going to like it. You're going to be tentative about jumping in again when you're lost heavily on it. Um, and that type of movement there didn't give a lot of opportunity to get out. Now it's just severe selling. So I think it's got a lot of work to do. It could take a lot of time. So I wouldn't want to tie my money up. Even if you don't get in the red, you don't take a lot of heat on the trade, you could be tying capital up for a long time. I think it's a big ask for this just to go straight up through 450, retest 6, pull back, make a highlight, and then go again on a daily basis, to do that over the period of a couple of months. I think that's a big ask. So that's why I would like to see a bit more work done. Holding some higher lows, contraction. I'm trying to do it with a pen without. Just go down. Just get that chart up again. Is that making sense, Grant, or to everyone else as well? What I'm trying to say, when you see this type of, let's get rid of that. I don't know why that happens. This type of strong move down, I feel that's got to be followed by maybe a retest of those lows and then start to lift, but a bit more work. You know what I mean? So you probably want to see it do a bit more work. I mean, all this could take 6 months. Who knows? It could take a couple of days. But yeah, I think it's got a bit more work to do. And that's just to prove itself that these are the lows. You need to see it prove itself to buyers. There might be still some sellers that are quite angry from being well up here, holding it still from up, $7-8. It's against them. They want to see the signs that, if this is not the case, they want to get out because they're sick of it. They hate it. Who knows? They still want to see signs that this is not the end, and it still hasn't showed me in particular this is the end of the selling. They still might want to sell it. You don't know. So I just want to see it still do a bit of work. I think but it's pure and simply from where it is, where it's been sold down to, it's worth a watch. All right, guys. Probably gonna have to call it a day there. I hope that was helpful to a lot of people. We enjoyed it today. We'll be back on again on Monday with the stream and a bit more chat. So yeah, if there's anything else on Monday just to chat about that you want to have a quick look at, feel free to either you can send through some charts if you want to have a look at something, or just it doesn't matter. Just wait until we get into start talking about it and chuck it into chat. Put the code in and we'll take a look at it from there. But yeah, we'll be back on board on Monday, and tomorrow we're just going to do a little presentation on something we've got our eye on. Maybe a couple, haven't decided just yet. But we've got a few stocks that we want to have a look at and then just see what they're doing, and we'll put up a presentation tomorrow. Yeah, and what we might see you later, Paul. Thanks, mate. Yeah, but thanks for joining us today. It's been great. We'll have a good weekend, and we will speak to you again on Monday, guys. Cheers.